What's good, man? Welcome back to Joe Rich Trades and Stocks. We spilling all the info that they don't want you to know, man. And recently, we have been getting a lot of new options traders and beginning options traders yapping in with the channel, man. And we got to make sure everybody around here is taken care of. So today, we're going to be going over something simple but very important that every options trader should know to the very minimum. You understand what I'm saying? Last video, we went over what is options trading in depth, man. We introduced y'all to what options trading was. We also dropped a video on how to navigate the options chain and the trading platforms. But today we're going to be giving y'all some free game on how to identify a trend, support and resistance, and giving y'all some spot analysis for the upcoming week so y'all can make some money with Joe Rich Trades. And before we get into the video today, man, I do want to give a special shout out to the Discord, man, because y'all know we always going to get a free game on YouTube, but the Discord has been going crazy and been especially making me proud. Everybody has been learning off of the game that we drop even more in depth inside the Discord, man, and the live signals that I drop every day inside the Discord, man, when the market opens. So I just wanted to put that out there, man, and show y'all some gains from the Discord, man. Everybody has been going crazy. So if you do want to consider joining, I'm gonna put the link in the description. You understand what I'm saying? So now let's get into it. So first things first, man, what is a trend in the stock market and why is it so important when we're trading options? So the first thing that you need to understand is that the market moves off of momentum. So a trend dictates where the market is more likely going to move, the direction in which the stock or commodity is going to keep moving to based off of the overall momentum on what you're looking at. In this case, we're looking at SPY, man. So let me go to my drawings, and let's say it's moving like this. It's making higher highs and higher lows. You understand what I'm saying? Each time it goes higher, it's touching a higher point on the price. Bam. Each time it goes lower, it's going higher than the last low. You understand what I'm saying? This is what a stock looks like when it's trending in the upward direction. Same thing when it's trending in the downward direction, man. When it's making lower highs and lower lows. You understand what I'm saying? Bam, this high is lower than the last high right here. That's kind of ugly, but y'all get what I'm saying. And this low is lower than the last low right there, man. So we're going to delete all that right quick. So when we're moving in the upward direction, man, this is when we're bullish. When we're moving in the downward direction overall, this is when we are bearish. The sellers are taking over. Bears equals sellers, bulls equals buyers. Always remember this so y'all can follow along with the terminology, man, and not get confused. Now, do we solely trade off of just trends of the market? No, but it's first and foremost what we need to understand when establishing what type of position we need to take on the trade. Because when you think about it, when the market is overly bullish like this, right, when we're in an uptrend, why would we take a short position, also known as buying and selling puts? Why would we try to do this? You understand what I'm saying? It would make more sense for us, instead of us trying to force a puts play on a small retracement and not knowing where it's going to draw back to, or if it's going to draw back completely, we would much rather just use the short-term pullbacks for entries on calls, knowing that we are overall in a bullish market and it's going to keep going higher. And the same thing for the opposite end, man. The same thing applies for when we're in a bear market. If we're seeing all these big red candles like right here, right, what sense does it make for us to try to play a small pop-up on calls when the risk to reward makes way more sense playing the downside? You understand what I'm saying? This is how a lot of people get stopped out, and this is how a lot of people cook their account trying to go against the grain, where in times like this where SPY just did nothing but go up all last week, right, and make new all-time highs. What sense would it make for you, soon as it hit this all-time high right here, this previous all-time high, try to short the market if overall we are in a bullish trend? You understand what I'm saying? There was no confirmation. Everybody that tried to short the market right there got squeezed on this big green candle the next day. You understand what I'm saying? So I just need y'all to understand that and make sure y'all know how to identify a trend in the market. You understand what I'm saying? Let me take this off the screen. So now, how to identify a trend? Let's say we go to a random point on the map, on the chart, excuse me. All right, y'all see this is a kind of obvious bull trend, but when does it stop being a bull trend? You understand what I'm saying? When it breaks the structure. Y'all see how it's making higher highs, higher lows. This low is higher than this low. This low is higher than this low. These highs are higher than this high. When does the structure break, man? You can point this out by sometimes using lines like this. If something like SPY is channeling, right? You see this channel, boom, right there. Okay, we say, okay, when does it break structure? If y'all see it breaks structure on this, let me delete that. It breaks structure on this big red candlestick right here. You understand what I'm saying? So now, after it breaks structure and breaks this support that it kept popping up from at 505 at one point, right? We can say, okay, now we're in a downtrend because why? The higher low trend has stopped happening and it has broken out of this channel. You understand what I'm saying? Now it's time to short the market. Why? Because we have confirmation that the overall trend is bearish now until otherwise. You understand what I'm saying? So again, I want to reiterate, we are not solely trading off of trends, but it can let you know which direction to place the trade in, man. So now if we go to the lower time frames, right? This is a problem that I see a lot of traders do, right? We were in a bull market last week, right? And y'all know how I just said it didn't make a lot of sense to try to short the market, right? The shorts was getting squeezed all week. Let's just go to a random day. Let's go to this day because I know somebody who got stopped out on this day in the Discord, right? So now we was breaking all-time highs and approaching all-time highs at 605, man. This was key resistance at one point, but we was overall in the bull market and he was looking at it on a smaller time frame, right? And he said, okay, at 606 it gave a red candle off of market opens, right? And he tried to rush in a trade because he thought that it was going to keep breaking this pre-market low right here. You understand what I'm saying? Now, as soon as he hopped in puts, he got cooked because why? He had no confirmation and we was in a bull trend. So instead of rejecting what was once a key level, it shot right past it. You understand what I'm saying? And the risk to reward taking puts right here, man, wouldn't have really made sense because, again, the greens were outweighing the reds all day because why? We were in a bullish market. You understand what I'm saying? So this being said, man, I just want to let y'all know, don't get caught up in a too small of a time frame, man. And watching the minute charts and 5-minute charts, man, you need to be looking at higher time frames for more confirmation because higher time frames hold higher power. You understand what I'm saying? So what do we use the lower time frames for, man? We use the lower time frames to give us confirmation on our entries. Now, if we was looking at the same example on this day for last week on SPY, right, we could have said, okay, we're uptrending crazy. We took off in after hours, had a small gap up. Now we can either try to come down and retest the gap, or we can hold structure, man. And after it gave you this wick from the downside, we could say, okay, even though this is a red candle to start the day off with, I'm going into calls because why? It held structure and bounced. This wick right here is a bouncing sign. Let me make this a little bit bigger for y'all. The red candle has this small body in its wick, which is a bouncing signal from this point that was once resistance that turned into support. You understand what I'm saying? So boom, we could have played calls and easily seen a quick 70% snipe. You understand what I'm saying? All we need for a 70% move on SPY is a $2 or $1.50 move. You understand what I'm saying? Depending on how volatile the cons is moving. So Even when we draw it back in after hours and in the pre-market next day, we only came down to fill that gap a little bit, then bounce back up. Because why? We were trending in a bull market. All the shorts were getting squeezed, man. And for the newer traders yapping in with us, man, when I say support and resistance, what do I mean? Support, you can think of this as the floor, man. The price that the stock, when it's running down, has trouble going down past, you understand what I'm saying? And resistance is the ceiling. The stock price, when it's going up, it has trouble shooting through, you understand what I'm saying? So if we was looking at SPY right here, what would be the resistance, man? Resistance would be this 605 to 606 area, man, which again, we was just talking about was once all-time highs at one point. And support during that week was at 600, you understand what I'm saying? Because it was holding 600 strong. Every time it hit 600, it bounced back up, bounced back up, bounced back up until it broke structure right there, man. And in the next video, we will talk about more of break of structure and fair value gaps, man. But I just wanted to make sure y'all understood what a trend was in the market in this video, and made sure y'all understood that the trend is your friend. Because even going back to the example we was just looking at, man, I think we was looking at it on this day here. It wouldn't have made sense if he had turned this to the hour time frame. He would have seen it wouldn't have made sense to try to short the market after all of this bullishness. You understand what I'm saying? It's a break at all-time highs, and it had no ceiling. Now, moving into next week, man, how are we looking at SPY, and how do we want to position ourselves to make some money in the stock market, either playing call options or put options this week? You understand what I'm saying? Now, it had made new all-time highs at a key psychological level of 610 to 610.50, man. It had trouble breaking it and rejected 1, 2, 3 times on an hourly time frame, right? So that gives us an idea like, okay, there may be some sellers stacked up there. You understand what I'm saying? And it's been green throughout this whole last week and a half, so it hasn't really had any real retracements, right? So if it does want to retrace, man, when the market opens, I'm going to be patient. I'm going to see where it wants to make a new support, because being that we have been shooting through the resistances like it's not nothing, we have to wait for the retrace and see, okay, where does it want to come back to and make a support and then bounce up off of, man. Now, I did retrace to this 605 level, which was once a key resistance. It made the key resistance what now? It made it to support. So I will be looking for a drawback to this 605 level. We can do a line right here, man. The 605 to 604 level, man. And if we come under that, I will be looking for 601 to 600, because if we go look to the left for confirmation, man, the last time we was up here, like we was just talking about, 600 did hold at a certain point, man. Y'all see, bam, 600 held as support right here. So I will put an alert on that if we do want to come back down. Other than that, I'm not forcing puts until we have confirmation or it rejects where the sellers are stacked up at. And it showed us where the sellers were stacked up at last week, man. Now, if we do want to keep going up, I will be looking for 611 to break clearly, man, because we did almost touch that on Friday. I will be looking for it to break up to the next psychological key level of 614 to 615, man. So with that being said, man, comment where y'all from, man. Smash that subscribe button, smash that like button, so we keep dropping the free game on y'all, man. And without further ado, we out.